Hey, it's Matt Santacapita from the Santa Sells Houses team, and this is another episode of our Monday Market Update. I'm going to jump straight into the numbers because then I want to kind of explain where the market's been for the past 3-4 months here. So new listings came in this past 7 days at 114, conditionals at 35, and solds at 87. Pretty consistent general numbers. So these are the numbers we've seen for the past 2 months. Which is good. Now, maybe not necessarily good in the sense of the numbers are fantastic, but what I mean by good for the past 2 months is we have stability in the market. And that's what I want to talk about next, but related to the median home price. So in the past 4 months, the median home price in London has ranged between $585,000 to $577,000. Why that's important? Well, we've had obviously historic interest rate hikes from the Bank of Canada. So the overnight lending rate has increased substantially over the past 6 months here, which then has had an effect on variable rate mortgages, but as well fixed rate mortgages. But why I really want to address the median home price kind of leveling off in this high 500 range is that what that's showing us is the market has accepted these interest rates. In reality, when it comes to buying a home, interest rates don't mean a whole lot. And what I mean by that is payments are what matters. An interest rate really means nothing. The payment is what matters because most people only have X amount of dollars of disposable income. And so what I believe we're seeing in the market now is where rates have gone is that monthly mortgage payment, anything between $2,000 to $2,500, that's kind of what most households are comfortable with as a maximum payment. Some people will be a little bit higher, some people will be lower, depending on income and all those types of variables. But generally speaking, the overall market, that's where we want to be, and that's kind of where we've settled in on. Now, interest rate hikes, we are probably going to see another one here in a few days from the Bank of Canada. I do think it's going to be a smaller 25 to 50 basis points. I'd be shocked if it was 50 basis points, but and then maybe another tiny one in the new year. But what I do believe is happening is that now we've seen this acceptance of the new norm for rates. Everybody's starting to go back out and buy. And we've started to see an uptick of interest over the past 2 weeks, which is odd given Christmas is right around the corner. But the other thing that I think will happen is in the new year, I do believe we're going to see the Bank of Canada is going to change gears. And I do believe at some point, probably summer to fall, we will start to see them ease off on the interest rates. Maybe they'll do a 50 basis point drop, let that sit for a couple months, and then another 50. Which then in reality will pull those rates down a little bit more, but I don't think they're going to have a major effect on housing prices. I think all it's going to do is put a few more buyers into the buyer pool, but I don't think it's going to cause any drastic swing in market prices for sales and values of homes. Anyways, it's Matt Santacapita from the Santa Sells Houses team, and this has been another episode of our Monday Market Update.